I think the hardest part is finding the deal.
I'm going to share 3 things that are working today. I am utilizing them myself. I'm putting together a fund, and these 3 things are working for me and for them, and they will work for you. The laundromats that are making money, they actually have a super high success rate.
There's just as many advantages to not even owning real estate when you're in an equipment business like laundromats. So like you should own businesses and own real estate.
You will have wasted the last hour and a half of your life if you don't take action on something here.
Welcome to the Own a Business Today podcast.
Hello, everybody. Welcome. I know everybody's excited to learn how to buy a laundromat. Everybody wants to buy a laundromat. And so we're going to find out that it can be achieved, but it's not as easy. I think the hardest part is finding the deal. And we're going to dive into, I think Jordan's going to do a 15, 20-minute presentation, and then we're going to have our Q&A box open so you guys can ask questions and we'll field them for you. Is that how you want to do it, Jordan?
Yeah, man. Yeah, absolutely.
Yeah. So
welcome, everybody. Excited.
Yeah. So I'm sure a lot of you already probably watched Jordan on his YouTube show called Laundromat Resource. Just go over there and subscribe if you're not, because his channel is all about laundromats. I was a guest 2 times, and obviously I do the financing. I do SBA loans, so it works well. We complement each other's skill sets, and so I invited him to our group to talk about how to buy a laundromat, because I get a ton of calls from people like, hey, I want to buy a laundromat. What do I need to do? And I think the biggest thing is like, one is how to find it and how to analyze it, and then the financing part I can definitely help you with. So we're going to dive into that and more today. So anyway, Jordan lives in Northern California.
Southern California.
Southern California. Why did I think you lived in Northern California?
I used to live in Northern California.
Okay, I thought you lived in El Dorado Hills.
Yeah. Southern
He lives
California.
in Southern California.
Yeah.
Commercial real estate broker. I think you cut your teeth in the real estate business. Then you found your first laundromat, and ever since you've been crushing it. So we met through a mastermind group that we're both involved in called Go Abundance. It's like 850 guys from all over the U.S., mostly some in Canada, and we talk about all 7 pillars: health, wealth, and that's how we met. And we're in the microtribe group, podcasting microtribe group, because we love podcasting, we love sharing knowledge with people, and so hence is why we're here right now.
Awesome. Okay. First things first, we're talking laundromats today. We'll talk a little bit about how to find them, and then we'll talk a little bit about how to analyze them and determine a value for them. And then I'll share my 4 pillars of due diligence. Number 1, finding laundromats for sale is easier said than done right now. And, it's similar to the real estate market, right? Where there's a more buyer demand. Well, I don't know, all that stuff's shifting in real estate right now, but how it's been is there's been more buyer demand than supply on the market for laundromats. And so finding good deals can be difficult. And I've talked with a lot of people trying to get into this business who are frustrated with struggling to find deals. So I'm going to share 3 things that are working today. I am utilizing them myself. I'm putting together a fund right now and buying a whole bunch of laundromats. I've got a ton of consulting clients, and these 3 things are working for me and for them, and they will work for you as well, even in today's market. So number 1 is we've probably all, if you're interested in laundromats, I guess, then you've probably at some point Googled laundromats for sale near me or something like that. And that'll usually spit out like a bunch of biz sites like BizBen, BizBuySell, BizQuest, Biz Jungle. I don't know. They're all biz something, right? And so that you'll go on there and you'll see a whole bunch of laundromats for sale. And that's great. You can find good deals there. Sometimes you have to make those into good deals. But here's, just to give you a little background, here's kind of how this works. Okay. So I'm a broker in California. And if somebody comes to me, in fact, got an email today, somebody said, hey, I want to sell my laundromat. And essentially this is what I say is, okay, let's put together a packet of information about the laundromat that a buyer is going to need. And once I have that packet of information, I will send that to a list of investors that I have that I know are looking to buy laundromats. And if all of those people pass up this laundromat deal for whatever reason, that's usually when it ends up online. So not to say you can't find a good deal. Not everybody has an investor list and all that. So you can still find good deals on there. They're just a little, you got to dig a little deeper. So the first way of finding deals actually is what I call the Google secret. And it's to search laundromats for sale near me and to look at those laundromats and analyze those deals. And we'll talk about that in a second. But even more important, maybe, or at least as important, is looking to see what brokers are actually active selling laundromats. And your goal is to get on their investor list. You got to build a relationship with them. You got to let them know who you are and what you're looking for. Where are you looking for it? What budget range are you looking at? As much as you can know that stuff, so that when a deal comes across their desk, you're going to see those deals before they end up on the biz whatever sites there. So that's that also, however, can be easier said than done. A lot of brokers are non-responsive, but it's a little bit of squeaky wheel gets the oil, perseverance. On the one hand, it gets really frustrating if a broker doesn't get back to you. On the other hand, for the silver lining is they're probably not getting back to many people. And so if you can somehow penetrate that wall of silence and enter into a relationship with them and get them to acknowledge you and respond to you, then you're much more likely to get those deals. So if you persevere, and I don't know, stalk them or show up at their office or, wait at their kid's school for them to come pick them up, or no, don't do that really. But, build that relationship with them, then that can help you get on those investor lists. So that's number one. Number 2 and 3, both are taken from what most people are probably familiar with these in real estate. And that would be number 1, direct mail marketing. And so that's essentially where you take a letter and, basically like, hey, my name's Jordan. I'm looking to buy a laundromat in your area. Just curious if you're interested in selling your laundromat, or if you know anybody who is. Here's my contact information. Thanks, Jordan. And I always include a PS in that. And I say, PS, if you're not interested in selling, no worries. But here's a fill in the blank resource, right? Here's a podcast episode. Here's a YouTube video. Here's a tool or a resource that I thought might help you take your laundromat to the next level. Best of luck or whatever. And what I found is that helps you really stand out in the seller's mind, triggers that reciprocity. So when they're ready to sell, if they're not ready now, they're going to think of you before they think of a broker who's going to charge them 10% to find you to buy their laundromat. Just a little bonus on that is that you can actually download the exact template that I personally use, or my clients, also consulting clients, use on the website laundromatresource.com. I believe you may need to be signed in to a free account, but once you're done, you've done that, go to the resources and you can download that. It's just a Word doc. You can edit it however you want, and a whole bunch of other resources for free there too. So that's working. And then number 3 would be something akin to door knocking, essentially where you're going to laundromats, trying to catch owners there, and have that same conversation you have in the letter with them. Now, one of the benefits of laundromats is that owners don't always have to be there. So chances are good you might not catch the owner there. So what I do is I actually keep a stack of those letters in my car. So when I go to these laundromats, I will hand the owner the letter so they have my contact information, or I will give that letter, if the owner's not there, to the attendant and say, can you make sure the owner gets this? Or if nobody's there, I'll drop it in the mailbox, so at least that letter gets there. Okay, so those are the 3 methods that are working right now. So you've got building relationships with brokers and getting on their investor list. You've got direct mail, where you're mailing the letters to the laundromats in the areas that you're looking. And you have got a door knocking, where you're showing up at laundromats talking to owners.
I would probably ask you, the question comes to the top of mind is, have you ever tried to get lists from these data providers? Kind of like fast track, like I'm looking for all laundromats in Northern California or Contra Costa County, or right, and then now you kind of fast tracked it. I know Google works too, but or what tactics can a lot of us out there have virtual assistants? We could probably have virtual assistants, and that's a little bit more advanced strategy, because I think a lot of people love the concept of, oh, I want to buy a laundromat, and then they get stuck. I think one thing I'm hearing from Jordan is there is work. You have to do the work to find the deals, and that's the key of this business in the beginning.
In this market right now, yeah. So what I did, so I have a list of all the laundromats in America. What I did was I went on Fiverr and I hired somebody to scrape Google Maps, and you can do this just for an area. It was pretty reasonably priced, especially for just an area. So just hire somebody on Fiverr to scrape Google Maps for laundromat or coin laundry or washateria, or whatever they call it in your neck of the woods, and just have them scrape it, and they can give you a list that'll have, the name of the business and any other information their Google map listing will have. Now, it won't have the laundromats that don't have an online presence, which there are some. So I have about almost 27,000 laundromats on my list. But I estimate there's probably somewhere between 30 and 35,000 laundromats probably in America. So the rest don't have an online presence.
What do you think? What about adding vending machines? Has that been lucrative to your laundromats?
Yes. So it's a great way to add some revenue. Personally, where I'm at now. So when I started, I had a soap vending, I had soda, and then a snack vending. So I had 3 different vending machines, there. And, you can make decent money, with those, couple $1,000s a month. Depending on your location, how busy you are, you can make some money. What I found over time is that as my time became more valuable to me, the time it took me to place orders to get the supplies to fill those, and then the time it took to actually supply those, it wasn't worth my time. And so now what I do is I let other people who have vending routes put their machines in there, and we do essentially a profit share.
Rev share. Okay. Very good. Good to know.
Yeah.
But if it was your first laundromat and you're like, hey, I want to make an extra $2,000 a month.
Yeah.
It's, very feasible.
Yeah, for sure. And I don't want to discourage anybody from doing that, but just for me, that was sort of my evolution, of that process.
You're a black belt in laundromats now. Most of us are starting as white belts. We gotta squeeze out the revenue.
No, and one of the great things about laundromats is like, you can put vending machines in there. You can add an ATM machine in there. You can put massage chairs. You could put, video game systems. You can sell stuff over the counter. There's it's like laundromats can be like the ultimate side hustle, right? Where you can have laundromat as a side hustle, and then you can have a whole bunch of other side hustles within your laundromat side hustle. Vending being one of many potential options. I had my son, when he was like 7 or 8, bought a gumball machine with his own money and put it in the laundromat, for his little business, essentially. So there's lots of different ways to, utilize side income in a laundromat.
Cool.
Great question. Anonymous attendee said, realistically, how much money do you need to get started? So if you do any amount of research on laundromats, especially if you go on YouTube, you're going to run into the whole free laundromat concept. And I'll just address it because I get asked this all the time. Is that legitimate? And the answer to that is, can you get a free laundromat? Kind of, but not really. And especially not in this market. So the concept behind a free laundromat is you find one that's closed down or close to it, and you essentially negotiate with the landlord and say, hey, I'll take over the lease if you let me do this, no money down. And then you go get equipment and you 100% finance the equipment, which you can do, but in this environment, it's very difficult, if not impossible, to do with no experience. So that's tough. And then in order to sort of manage renovations, the concept is you negotiate with the landlord what's called tenant improvements, or TI, to have the landlord pay for new flooring, new paint, new folding tables, stuff like that. So that's the concept behind it. Can you do it? it's really difficult to do in today's environment. It's really difficult to do in any environment, and it's almost impossible to do in today's environment. So the question then is, how much do you realistically need to get started? It's hard to put a minimum because there's lots of different ways to finance this. You can raise money, you can get seller financing, you can partner on deals. But if I was going to sort of put a number out there, I'd say probably $50,000 would be a good starting amount. And you don't need that all to put down necessarily as like a down payment. But that $50,000 is sort of what I would ballpark for a starting amount. I don't know if you would say something different on that.
So, if you're buying from an SBA lending standpoint, if you're buying an established business that actually has strong financials, many of them don't because nobody wants to pay taxes, but there's ways around that. SBA, if the cash flow from the business is there, will lend 90% of total project costs. 90% means you need to come in with 10% of total project costs, purchase price plus working capital. So if you're buying $1 million facility or 900,000 facility, and we're repairing some stuff and building working capital, was $1 million deal. SBA loan would finance 90%. You come in with $100,000. Now the seller can carry 5% on standby. You close for $50,000. A lot of these laundromats, especially coin operated, they're showing no revenue. That's the challenge with the SBA. They're workable, but you also have to have compensating factors from a lending standpoint. So there's ways around it. And I'll just add this in. I'll let Jordan go back. When I was on Jordan's podcast, a gentleman approached me that heard me on your podcast, and he had one established laundromat and just a little over a year. And I ended up taking him to a bank, and then he was very low liquidity, was trying to start a second location. And so business expansion, SBA can do 95 to 100% loan to cost, and that's with no real estate. So once you're established, it gets actually easier. But yes, if you don't have experience, you can potentially get SBA financing. You don't want to, if you're doing that, you want to buy a laundromat in the vicinity of where you're located. Like if you're in California, you want to buy one in California, not in Florida, because they want to know that you're going to operate the businesses. Laundromats do have a pretty high failure rate. I was surprised, but they obviously weren't being trained by Jordan.
That's right. Or maybe they were right when I first started, because I had a rough entrance into the industry, which is pretty funny. So So the other things you need to think about, though, is down payment is one thing, but you're probably also going to have things like a lease deposit. You're probably also going to have utilities deposit. You're probably also going to want some money in the bank as some runway, especially if you're doing a fixer upper. If you're doing a fixer upper, you're going to have some holding costs where business is not just going to come right away. It's going to take a little time to ramp up. So those are some of the things you want to think about. So if I had to ballpark a number, I'd say $50,000. You can definitely do it with less money than that in the bank. And obviously you can do it with more money than that in the bank. Hey, for an average sort of base hit laundromat deal, you're looking at about a 20 to 25% return on your money. That's without using a loan, without using leverage. So it can go up from there. And that's a normal operating laundromat that you buy that's already cash flowing. It's not a value add. So if you're looking at a value add laundromat, if it's me, I'm trying to get at least a 50% ROI on a value add laundromat. But I mean, so one of the things I say, there's two numbers you need to think about when you're buying a laundromat and you're determining if a laundromat's a good deal for you or not. Number one is your return on investment. You need to figure out your threshold of what return on investment are you good with. There's a ton of people out there that are like, actually don't need any ROI because I'm just in it for the tax benefits, right? And there's a lot of people who are like, I need to see at least 20% or 50%, whatever the number is. So think of that. What's that number for you? And then number two is you also need to think about what's the threshold income amount, net income amount, right? That you're going to put in your pocket. So I could say, hey, you're going to get 100% return on your money, but you're going to make $500 a month, running the business. And some of you guys are hearing that and are like, sweet, that sounds great to me. $500 a month. 100% return on my money. Awesome. And some of you are thinking, man, is it worth it to run a business for $500 a month? I don't know if it's worth it, right? So for some people it will be, some won't be. Some are going to be like, hey, $500 a month is great. Some are going to be like, I need 10,000 a month, right? So you need to determine sort of where on that scale for you, the ROI target is going to be. So something that's good for me, like Bo was saying earlier, if you're just starting, you might be super excited with a 10 or 15% return on your money for a fixer-upper laundromat, because it gets your foot in the door. And now you have a lot more deals flowing your way because people know you as a laundromat person, and lenders are lending you more money and more opportunities open up, right? So lots of things to kind of consider there. I see a lot of cash offers for those selling their business. Does this not include SBA loans or any other loans? Oh, so if they're asking for a cash offer, I'll let you tackle it, but I'll say this. One thing I see a lot, especially on those biz whatever sites, is that one thing I see is that when sometimes people put cash offers only, they mean only cash offers, which usually means that they're not willing to finance the deal and they don't have books for that deal to get financed by like a bank or something, or an SBA loan. Sometimes I see owners putting cash offers only because they're just trying to communicate they're not willing to carry a note on, they're not willing to do seller financing on it. So it doesn't mean you can't have a loan. It just means that they're not going to do seller financing. So for me, I would ask the question, are you looking only for cash, or, can I do an SBA loan, or can I do, some other type of lending option? I don't know if you have anything to add to that one.
Yeah. I mean, I think a lot of these mom and pop facilities are going to show very low cash flow on their tax returns and not be professionally run. So you're going to run into issues from a cash flow perspective for bank financing. But there's a ways around it. But I would say that that's probably the number one thing that you're going to run into, is that they've been running coin operated facilities. They've been doing it for 30 years. They're cleaning house. They're paying no tax, very little tax. A lot of times too is what they do is they run a lot of personal expenses through their business. Oh, I got my my Escalade and my daughter's Escalade car payments in the business, right? So sometimes what we can do is we can take out those expenses once you take ownership, and we can add that back into cash flow. But that is the big challenge with Laundromat. Plus, the business, let's face it, business brokers want the easiest deal possible. They don't want to deal with SBA. Notoriously is like pulling teeth, and sometimes it is. I mean, it's just a lot of back and forth. And so these brokers want to get paid their 10 or 12% commission quickly. So that's two. So I think there's other stories. And I also want to go back to what Jordan said earlier. This is why Jordan's marketing to off-market deals, because those are the people you can build relationships with, right, Jordan? I would like to introduce you to Own a Business Today, a new digital and print magazine. We take pride in being the only magazine that assists small business owners to bring relevant information on business ownership and financing. We're going to cover topics such as business acquisition and expansion, franchising, business finance, technology for entrepreneurs, economic outlook and forecasting, and much more. To subscribe for free, please visit ownabusinesstoday.com.
Yep. Yeah. And that's a great point about the brokers too. A lot of times brokers are going to dissuade SBA loans or any loans really. If they can get a cash offer, they'll take that any day over a lending option, just because there's less hoops, which is it's the shortest path to money for those brokers and for the sellers too, to be honest. So great point on that one. Michael has a great question. He says, how far ahead of negotiating an actual deal do you need to become incorporated? I'll let you weigh in on this too, but here's how I do it. I make the offer or the letter of intent in my name and or assigns. And I actually don't form an LLC or an S Corp or anything until after I'm in the due diligence, until I get an offer accepted. So I'll make the offer in my name, and then I'll include and or assigns. And then during the due diligence, I will form that LLC or that S Corp or C Corp very rarely. And then I'll assign the contract before the close of escrow to that corporation. That's how I do it. Anything in particular you got to do with SBA?
No, I would agree with you 100%. There's no need to go start a business entity today, because it might be next year, the time you find your business, and you just wasted $1,000.
Yeah. Or you might find another shiny object to, car washes or, something like that. Who knows?
True.
I've seen so many laundromats that are doing, 30, 40, 50,000 a month and are netting like $3, $4, $5,000 a month. And I've seen other laundromats that are grossing like 10 or 12,000, but they're netting 5, 6, 7,000. So I'm more interested in the net than the gross. And part of what's going to play into that is the business model. And another part of what's going to play into that is the operations and the operating. So obviously the gross is going to play into that. And there's potentially more wiggle room in terms of finding operational efficiencies. If there's already an existing higher gross income coming in, maybe you can, consolidate some roles and, and get payroll down or something like that. And so that could give you some instant cash flow. Or maybe you find one that's running real lean and you figure out a way to get more business. So for the gross, it's a hard question to answer. And not only that, it's going to depend on your own situation, right? Like I said, some people are going to be super excited with $6,000 a month gross and they're making $500 a month. And some people are like, I'm not touching anything until I'm making $50,000 a month gross and I'm netting, $20,000 or $15,000, right? So probably on average, you're looking at $15,000 to $20,000 of gross, if that is helpful at all. And there's obviously lots of laundromats doing less than that and lots doing more than that. But if I was going to give you like an average, probably in that range. And if you're looking for a connection, two things you can do. Check out laundromatresource.com. Go to the forums. There's a new member introductions forum. You can just go there and check it out. And people, introduce themselves and tell you where they're at. So you can check there. Or you can email Jordan@laundromatresource.com. And I'll see if I can connect you with anybody in Vegas.
So the questions I would ask are you buying this, or you already own it and you want to retool? Owning it and you want to retool, and you've been doing financials yourself and you have tax returns. Yeah, either way you can. It's also going to depend on various factors. But for example, we can do startups too, where somebody's they sign a lease and they're getting, with the build out and everything, $1 million. Actually, Jordan, we got one from when I did your show, and he's got a loan commitment. So you can get things done. Every bank has different appetites. Like, I would need to know more of it, but the answer is yes. And also Jordan could probably speak on the big boys, meaning the laundromat manufacturing companies, because they'll also do a lot of financing internally. I'm not an expert with like Alliance and those brands. I'm curious as what brands you like and that kind of stuff. But there's definitely ways you can do it, whether it's SBA or going and getting funded through one of the manufacturers who's going to come in and repurpose your equipment or reservice. I'm sure they could come in and retool the, depending if you're doing a full replacement. I don't even know the lingo on, like, are you doing a full replacement, or how do you know when to do a replacement? That's all Jordan stuff there.
Yeah. Yeah. And you can get financing through the manufacturers. And a lot of times you can get 100% financing, especially if you already own the laundromat. And a lot of times they'll loan 100% on a retool through the manufacturers just to move that equipment. So, but it's nice to have your different options, right? So whether SBA can, or the manufacturer, or there's also laundromat specific lenders, and there's also like your local banks and credit unions, right? So those are different options that you can look into to find your best bet and the best structure that's going to help you succeed. And especially in today's lending environment where, everybody's just sort of tightened up a little bit and are needing, more down payments and stuff like that. It's nice to be able to, find some options to, have some options, I guess. What's funny is a lot of times I hear people say, hey, I'm thinking about getting into, a smaller laundromat just so it's, get my feet wet, less risky and all that. And while that can be true, and it makes sense, right? Because typically a smaller laundromat is going to be less expensive. And so there's less money involved. However, the riskiest laundromats out there are, I mentioned free laundromats earlier. That's the riskiest way to get in this business, is to try to go that free route. You're taking a business that has already failed and you're trying to make it succeed where it's already failed. Can be done, but it's difficult and it's risky. And then the other one is not quite as risky, but still riskier than normal, would be, taking what we call in the business a zombie mat and basically retooling it and trying to turn that around. So one that's been mismanaged, half the machines are out, half the lights work, it's kind of grimy. It's really not making any money, and you got to go in and turn it around and make it profitable, right? So anything that's not currently making money is the riskiest way to get in the business. And the laundromats that are making money, they actually have a super high success rate because they're already making money. And when you're buying them, you should just be buying them based off of that money that's coming in. So, you should know what your returns are going to be based off of how much money's coming in, right? And that should, you got to do your due diligence, but that should continue on as you go forward. So that's what I would say is the riskiest types of location. There's the other side of things where obviously, some laundromats do really well, but they're in rougher neighborhoods. So that's something to think about too. Are you willing to go to a location? And we're not talking financial risk anymore. We're talking, I guess maybe a little bit financial, but we're talking safety risk, right? Are you willing to go to this laundromat at night? That's another one to factor in when you're looking for a laundromat. Good man. So questions. What are your thoughts on no coin versus coin laundromat, and also 24-hour laundromat? So by and large, most laundromats are still coin laundromats, but more and more are incorporating a digital payment system, whether that be their entirely 100% digital payment, like card, loyalty card, credit card, app pay, that kind of thing, or a hybrid system where they take a card or an app or something like that, and also coins. So I am definitely a fan of moving more towards the digital payment options. So for me, it's not a coin versus no coin. It is, the debate more is, do I do a hybrid versus a digital only payment system? And there's a lot of factors that, that play into that. So you want to think through the community that you're in, how they're going to respond to those things. Sometimes you can offer the hybrid system, which gives you a market differentiator, and then slowly phase out coins or, something like that. The benefit of not having coins is, number one, it makes accounting a lot easier, which makes your laundromat more valuable, actually. And also just the management of the business is so much simpler with those digital payment systems. So for me, it's not coin versus no coin. It's, should I do a hybrid with coin and digital payment, or digital payment only? In the fund, we will probably work towards getting all of them to digital payment only systems whenever possible, just because accounting is a lot easier, management's a lot easier, accountability is a lot easier with that system. It would allow us to manage a lot more laundromats better that way, cleaner that way. And in terms of 24-hour laundromat, it's just math, right? Well, it's math and a little bit neighborhood, right? So you got to feel like it's safe to stay open 24 hours. And then after that, if the answer is yes, then it's just math. Are you going to make more money staying open, or are you going to save more money by closing overnight? And you may have to do some trial and error. But I'd just be looking at numbers to make that determination. Awesome. Anonymous attendee, how many hours can an absentee owner need or expect to be involved a month? Great question. I will talk about it in terms of weekly commitment. So I'd say early on, you're probably looking at 10 to 20 hours a week early on, as you're learning the business, you're getting to know any employees you have, you are making any assessments on, do you need to make repairs or replacements or renovations or any of that stuff. You are training any employees, even if it's just a cleaner, on your expectations. You are kind of overseeing everything. You're keeping an eye on all the financials, all that stuff. You're learning, doing a lot of learning the first 1 to 3 months, maybe, where you're like 10 to 20 hours a week. After that, things are stable at that point, and you're an absentee owner. I mean, you could be looking at maybe 5 hours a week. For me, when I owned a couple laundromats in LA, I spent more time, this is probably not that surprising, but I spent more time on the freeways going to and from the laundromats than I did actually at the laundromats every week. So I think 5 hours a week is a pretty good target. And you will have some times where things happen and you're going to be there more than that 5 hours for the week. Maybe, there's some issue that comes up or something, but by and large, it's pretty stable, pretty rhythmic business. And you can set up some automation and systems and processes to really minimize your time. And I think that's one of the big things that attracts people to this business is that they're not passive. And I don't want to give the impression that they're passive. You're going to have to do stuff, or you're going to have to scale to, maybe 3 laundromats or so to where you can hire a manager to do the majority of that stuff. But they're not passive, but you can lean them pretty heavy on the passive side of the scale, especially in terms of a business. This one's for you, man. Can you get an SBA? Oh, we already did this one. SBA loan to remodel an existing laundromat. Talked about that, right?
Yep.
Are we talking literal or figurative laundromats during this session? Are we just talking low-hanging fruit, non-sexy, boring businesses that are profitable using laundromat as a model? Or are we just talking literal laundromats? I don't know what we're talking about anymore. I think we're just talking about literal laundry. I don't know. Am I missing the point of this question?
Yeah, we're just talking about laundromats. Buying laundromats.
Talking laundromats, non-sexy, boring businesses, and also literal laundromats.
That was Cody Sanchez, I think.
Yeah.
Are you looking for capital for your business? Whether you need to get new equipment, finance your accounts receivable, raise working capital, or acquire commercial real estate, SBA Exchange can help you get approved and funded. SBA programs can also fund ground-up construction projects. The process is simple, and the initial consultation is free. Simply book a call. An advisor will call you at your desired time. We have built relationships with the top SBA lenders. We know their lending appetite. We will source and connect you with the appropriate lender. You will not waste time trying to figure out who to apply with and how to get started, and follow the process through to completion. We have streamlined the lending process from A to Z and work with you on all forms and documents to expedite your loan approval. SBA Exchange is the marketplace for SBA financing.
What's the biggest con? Oh, great question. What's the biggest con of owning laundromats? Well, one big con of owning laundromats has to do with your expectations. First of all, I talk to a lot of people who expect it to be completely hands off, and it's not. I always kind of half joke, but not really a joke that whenever you deal with people or machines, you're going to have problems, and laundromats have a whole bunch of both involved. So you're going to have problems. So dealing with issues that come up, disgruntled customers, machine ate my quarter stuff. That can be a huge con. Any kind of retail business is going to deal with this to some extent. What I didn't do early on was set up processes and systems to deal with those issues. So I was dealing with them time they came up, instead of saying, okay, here's our policy of how we deal with this type of thing. So that's a big con. And stuff happens, right? Like I had my laundromat flood before. I've had people break into coin boxes. I've had people graffiti the laundromat. I've had homeless people sleeping in the laundromat. So those are things, and it depends. Part of this, I'm in LA, right? So part of this depends on where your laundromat is. Not everybody's experience is going to be that. But those are some of the things that are pretty common if you're in an urban area where you're going to deal with, especially if it's an unattended laundromat. I will say that if your business is making money and you have an attended laundromat, somebody is there when it's open, you're going to have very few headaches, most likely, most of the time, unless you have like super old machines and they break down all the time. That's a headache. But cost of getting in is a con. Cost of equipment is a con. I'd say those are probably the big ones of that barrier to entry. And especially now that interest rates are higher, and I think that's where Bo comes in and can help you have less money down to get into these businesses, to change your life. That's the goal, right? Financial freedom, cash flow, changing your life. That is the goal. And that's what Bo is helping people do.
I have a question.
Yep.
How do you spot the opportunities, like the value add opportunities? So you're looking at a facility and they don't have wash and fold. When do you look to do wash and fold? When do you look to do delivery services? What are you looking for like the hidden gems in these laundromats where it's like when I used to flip houses, I knew the floor plans. I'd say, oh, that floor plan, I can do a value add. I know, like I saw it. What are those signs in the laundromat business?
Yeah. So first thing I'd be looking at, we're talking low hanging fruit here. I don't know if that means we're not talking literal laundromats anymore or not. I was a little unclear, but we're talking low hanging fruit here in terms of the value add. One thing I'd be doing is doing an analysis on the price point. In a lot of laundromats, you can go in day one and raise prices and not lose any customers and immediately gain cash flow and immediately gain equity in your business because you're gaining cash flow, right? So that's one value add that I'd be looking at right away. So in order to determine that, I'd be looking at what are competitors charging, where does my laundromat fit in regards to the competitors? Like, is it as nice? Is it not as nice? Am I going to make it nicer? Is it bigger? Is it smaller? Is parking better? Is it not better? And based kind of on some of those factors, I'd be saying, okay, I think I can raise prices by a quarter or 50 cents or $1.50. I just had a consulting client. We raised prices by like $2 per machine because it was so underpriced and they were already making money when they bought it. And so, and they were still under all the competitors. So they didn't lose any customers that way, right? So that'd be the first thing. But in terms of adding the service side of the business, you need to figure out, number one, if that's the way you want to go. So when you're going the service side, so drop off laundry, pick up and delivery, that kind of thing, that can be an awesome value add for your business. But especially when it comes to pickup and delivery, it's a different business almost. I mean, you're utilizing existing assets to essentially build a different business. You're talking about, you're doing logistics now. You're taking responsibility for thousands of dollars of people's clothing, and it's very personal to them. And you're responsible for, keeping them, getting them clean and keeping them intact and making sure they get back everything that they gave you and nothing else. Nobody else's clothes, right? So you're taking on extra responsibility. So that can be hugely profitable. And I've got buddies who've built multi-million-dollar pickup and delivery businesses, including one who Cody Sanchez invested in his name's Mark Vlaskamp. And he just had a $3 million exit from his pickup and delivery laundry service business. So you can be hugely profitable, but you got to decide if that's where you want to go, for one, because there's more involved there. It's less hands-off, at least initially, until you can hire out the management. And then two, you want to look at demographics. Is there business to support that around where you're at, right? You're probably looking at above median income in households now, and you're probably looking at small businesses like salons and massage parlors and restaurants and small motels, stuff like that are looking for people to launder their stuff for them. So those are some things to consider. And the one other kind of thing to consider is, does your laundromat have capacity to do that laundry, right? So if you've got a lot of people coming in, you're self-serve, do you have time slots where you can, safely process the pickup and delivery of the drop-off laundry where it's not going to interrupt your self-serve business, right? So that's another sort of factor to consider. What would be the ideal lease when you're seeking to buy a laundromat? And also, when is it best to replace the equipment? Awesome. So lease is like the most important document. It's like a marriage contract, so super important. So a couple of quick things on the lease. Longer leases are better for laundromats, right? And the reason is because you can't easily move a laundromat. And so if a landlord doesn't renew a lease or doubles your rent amount, you're in a tough spot with the laundromat. So what I'm looking for is typically what I'm looking for, especially if I'm doing a new lease, I'm looking for a 10-year lease with 2 5-year options to renew, or maybe 3, if I can get it. So 20 to 25 years. I always tell my consulting clients, I almost never recommend signing a lease less than 10 years. And even at 10 years, I'm feeling a little bit uncomfortable about that. And part of the reason for that also is lending. Lenders don't want to lend if you don't have a long enough lease, because it just doesn't give you enough time to pay them back with security. And they want to know that you're going to be in business for a long time to be able to make their money back. So that's what you want to be considering. And if it's less than that, then I would add a contingency in my offer and just say, here's my offer, but it's contingent on negotiating an acceptable lease. And I would be trying to either negotiate a new lease if it's less than 10 years, or probably more likely adding 1, 2, 3, 5-year options, after the lease is up, to the back end of that. And then when is it best to replace the equipment? So I've talked with a ton of people in the industry. I have a podcast. I'm interviewing the best owners in the business, and pretty consistently across the board, the best owners in the business are replacing their equipment, their washers at around 15 years, give or take a couple of years, and replacing dryers at around 20 years, give or take a couple of years. So that's some ballpark. It's not hard and fast rule. And there's lots of people who keep their machines longer than that, but that's what I see the best people in the business doing. Share the website, laundromatresource.com. You can just search that on Google. It'll pop up everywhere, but laundromatresource.com. Top 5 KPIs to look for in a location. The lease is number 1. So the rent amount, you want your rent amount target is about 25% of the gross income. It can be higher than that, but it starts to affect the valuation above that, and obviously lower than that, even better. So about 25%. Again, I'm looking for a minimum of 15 years and preferably 20 or 25 or even 30 years on that lease. There, I am looking I'm looking at demographics, and I want to see at least, what I'm looking for is at least 40% of residents in, depending on how dense it is, in a half-mile or a mile location in the urban areas that I'm at. I want to see at least 40% renters and, and below median income housing. That's the typical self-serve clientele. And if I have the service side of the business, then I'm looking at, a higher income point at that point for that.
Jordan, where can you get that? Will the manufacturers provide that information if you're looking at buying a facility?
For the demographics?
Yeah, I think that'd be valuable for people to learn.
So a lot of times brokers or distributors who sell equipment can give you the demographic data for free, usually, if you're utilizing their services. I'm also building out laundromatdemographics.com, which I believe actually is operational now. But I would check with the distributor or broker first off of that. This one's for you. Why are laundromat failure rates so high? What's the top causes for failure? Have you seen anything with that?
I have actually a study from a bank, and I'll go dig it up, and I'm going to send it to Jordan so he could read through it and do a podcast episode about it.
That's awesome. If I was to guess, this industry, so this is a very mom and pop industry, and you chime in on this too, because I haven't read your study or the bank study. But if I had to guess, I mean, this is a very mom and pop business still, which means there's a lot of opportunity there. But operations, I mean, if you close your eyes and think of a laundromat or picture a laundromat, more than likely you're going to picture one that's kind of run down. And there's this sort of mindset that is starting to be phased out of the industry, but it's been here for a really long time of not reinvesting in the business. I don't need to do anything. People just come to my laundromat, so I don't need to put money into the business. I don't need to buy new equipment, et cetera, et cetera. And so I think that mentality is probably a big part of it. So the operations side and that sort of pervasive narrative that this is a hands-off business, which I don't believe it is a hands-off business, at least if you want to be successful in it long-term. So that would be another thing I would probably point to. Anything else you can think of? Or
I just found it on, it's called the IBIS World Report, Industry Report, Laundromats in the US. And anyways, I'm going to share this with you. It was done in February 2023, so a little bit old, but I don't know if this was just geared for startups. You know, people thinking like, hey, this is a great place to start a laundromat. I'm going to share. I'm actually going to read through it a little bit more.
Yeah,
because,
I'd be interested to see it.
Because actually, when I was working on a deal for a startup, one of the banks I was talking to pulled this report, and they said, my bank doesn't want to do the startup. Anyways, I ended up getting it done. But the point is these banks are old school and they're looking at stupid reports. So that's the other thing too, is the business plans, guys. If you're doing a startup, it's a lot more. Jordan probably doesn't teach doing startups because it's a lot more work. I'm sure he's all about business acquisitions. Oh yeah, Jordan, I was saying you're more about business acquisition versus starting from scratch because it's a lot more work starting from scratch. But if you get good at starting from scratch, you can crush it.
Yeah, it's definitely a lot easier to buy an existing, even if you have to retool it. It's definitely a lot easier to do that. And you know, there's a stat that flows around that to this day I don't know where it comes from, but it did plague me early on that laundromats have a 95% success rate. And if you have listened to Cody Sanchez and stuff, you've probably heard that stat. Now, while I don't think that number is accurate, I do think it's very high for existing laundromat locations. It's a very high success rate. On the startup side, you know, you're coming into a pretty mature market. There's laundromats all over the place. And so you've really got to have a solid game plan to come in as a startup, a brand new laundromat, and find a lot of success that way. What are laundromats' trade multiples of net income? So I've seen them creep up over the last 18 months. So it's been 3.5 to 5 times net income. And now I'm seeing more 4 to 5.5 times net income. Sometimes you can get them less than that. Sometimes you can get them more than that. But that 4 to 5.5 times net income is what you're looking at right now. How about a build out if you have a high visibility parcel and low competition? I would Zuleika, I'm probably butchering that. Sorry, Zuleika. If I was you, I would get together with a couple of different equipment distributors and have them pull demographics for you and have them give you their idea of, is this a good location? If so, what square footage and what equipment mix and what store layout. And I'd get that from a few different distributors, and they'll be able to help you decide if that's going to be a good location. I mean, obviously it's got a lot of stuff going for it, but you're going to need to look at what the demographics look like. You're going to want to look at the traffic flow. Past that, you're going to want to look at, do a competitive analysis and look at competition around there. So there's a whole bunch of things to sort of consider, but a distributor will do that with you and for you for free if they think you're going to buy equipment from them. So I'd talk with a few of them, figure out who you connect with, who you click with, and get their input on that, because they're going to know your market really well.
And the other thing is too, that if you're doing a startup, that what you're getting that information from the manufacturers. You can also get some good information from local chambers. Is very much needed because when we do startups with SBA financing and you want to finance 80 to 90% of the total project costs, they want you to put together a business plan, and it doesn't have to be super elaborate, but there's key factors you want to put in, like why here, what's the average, what's the average load cost, all these things that need to be substantiated. So you give comfort to the underwriter, right? Like they're going to give you $1 million loan on some startup, and you may not even have additional collateral like real estate holdings. So the very aggressive financing from SBA, and it's achievable, but the business plan and projections, and we have templates for all this stuff, is what you'll need if you're doing a startup. Because I think, obviously there's demand in certain areas that don't have oversaturation of laundromats because they're emerging cities in, Las Vegas, for example. Like if you go into Inspirada, which is kind of close to where you're at right now, Jordan, they're building 80,000 homes there. And most of them are single family, but they're going to scatter in some apartments. So somebody who got in there could do very well.
Awesome. Michael says, does having excellent credit help when negotiating if you have little cash to start? Do you want to answer that from an SBA perspective?
Yeah, you can be very creative with SBA. So you have good credit, you have a good W-2 job, you're local to the business, you're gonna operate it, and then you give Jordan a call. Hey, Jordan, do you want to be an investor in this laundromat? Here's the numbers. Here's the business plan. You can own 19% of the laundromat for a $75,000 equity injection. So that equity injection on SBA doesn't necessarily have to come through by you. So that's why I'm telling you, like SBA is not like the end all be all, but it is an amazing product if you can utilize it because you just did a 100% deal. Jordan owns 19% of the laundromat. And then he's also smart. He'll probably consult you too. And he's happy because he's getting a nice override and he's building equity in his, portfolio of laundromats. So if you're low on liquidity, squat up, partner up. That's my advice.
Yeah, nice. Just out of curiosity, I know there's a couple ballers in the chat here. If so, say in this example, Michael, like, hey, Jordan, 75,000, yada yada yada, and you get X percent or whatever. How does that work? SBA, is the investor then going to be put through the ringer on the SBA? How does that work?
As long as you own less than 20% as the investor. So let's say Raj, I find a laundromat here in Vegas and I'm like, Raj, man, I just spent my last money on my newborn that I'm having a child. I had to buy a crib. I have no cash. Raj, I need you to come up with 100. I'll give you 19% ownership. Here's the projections. Raj doesn't have to guarantee the loan. I'm guaranteeing the loan. So that's on me. So we do it all the time. It's meant for it. It can't be borrowed funds, but they have to be, a minority owner. They have to own less than 20%. They don't have to be a guarantor. In the purchase and sale agreement, we separate the value. I'm buying the business for 300. I'm buying the real estate for $1 million. They used to just be able to amortize over 25 years. See, right now, if you just buy a laundromat, it's going to be amortized over 10. So if you buy the real estate, it could be amortized anywhere from 15 to 25 years. Now that if the term of the loan's over 15 years, there's gonna be a three-year declining prepayment penalty. But the point is you can get a much longer amortization. And you know what a longer amortization means? It means your debt payment monthly is a lot less. And if you're a cash flow investor, that's going to work really well for you. So not to mention, I think a big thing too, and Jordan, I'm going to introduce you to a CPA contact of mine that I just met. But there's a lot of amazing tax benefits. Obviously, with real estate, we got cost segregation, bonus depreciation. But with equipment, as Jordan knows, there's Section 179. There's also bonus depreciation. There's just as many advantages to not even owning real estate when you're in an equipment business like laundromats. So like you talk about like owning real estate. I mean, you should own businesses and own real estate. Every wealthy person either owns businesses or owns real estate. Usually they own a combination of both.
Yeah.
Right.
Yeah. Yeah. And earmuffs to you, Bo, and to the SBA. But one thing that I have seen to be effective, and I don't necessarily think that you should look into this. But if you're looking at both the business and the real estate, sometimes it makes more sense to pay a little more for the real estate and just have the landlord just leave the equipment. Don't buy the business from them, just have them leave the equipment and maybe pay a little more for the real estate, if you know what I mean. And because it's so much easier to fund real estate than a laundromat sometimes, especially if they don't have good books, that you can, sometimes you can make that work. Not necessarily saying you should do that, but maybe.
Yeah. You can be creative. There's a lot of ways to be creative.
Yeah,
we'll be creative with you for sure. Can I ask one more question? So a lot of newbies, they're always like, they go, okay, I just saw a laundromat for sale, and they think they can just get a buyer's agent, like a business broker buyer's agent. But would you kind of tell people that usually doesn't work because they don't have buyer agent business brokers as much? I mean, once in a while you'll see it, but most of the time, if it's going to be, you're dealing with this, the selling business broker. And then why I'm bringing this up is that this is kind of why, there's Jordans of the world around, because you're going to need somebody that's going to vet the deal with you. So what options do they have when they find one and they're like, well, the guy's, on the side of the seller and I don't have anybody representing me and I don't know, do you help people vet those type of deals?
Yeah. So let's say Bo's like, Jordan, I love your house. I want to buy it. I'll give you $2 million for it. And I say, because you're my friend, I'll give you a break, and I'll sell it to you for $2 million. Right. So his agent talks to my agent, they cooperate with each other. And then, my agent gets paid and then my agent pays his agent. That's essentially how it works when you're buying a house. So those agents or brokers cooperate with each other. And when it comes to business and commercial real estate, a lot of times the brokers don't cooperate with other brokers. And so that means the brokers represent both the buyer and the seller. Sometimes, like you said, sometimes there are buyers brokers, but a lot of times they either won't, or they say, okay, I'll cooperate, but you've got to pay your broker outside of the transaction in addition to that. So in that scenario, and even in a scenario where you have your own broker, if you're starting to see yellow flags or red flags, that's a time to bring somebody who knows the business in. And I'm not here to sell coaching or consulting or anything like that, but I do have consulting team, including myself. You can book a call anytime. laundromatresource.com/coaching. And you can book a one-off call anytime. We can talk about anything that you want to talk about. If you want to analyze a deal, if you want to go over paperwork, if you want to look at a lease, we'll do that stuff with you and make sure that you're asking all the right questions, you're getting all the right information. Our number one goal is to make sure that you know exactly what you're buying before you buy it. And so, if I always say, so when I bought my first laundromat, I lost a ton of money. I had no idea what I was doing, lost a ton of money, 6 figures worth of losses in my, first couple of years of owning a laundromat. And one of the things I genuinely believe is if me back then could have had a 15-minute conversation with me now, it would have saved me all the heartache and all the money that I lost or invested in my education. It would have saved me all of that with just 15-minute talk. And that's what we do. We look at deals, all day, every day. So laundromatresource.com/coaching. If that is ever a tool you need to pull out of your tool belt, it's there for you. And I'm not here to sell, coaching, but I am here to make sure that you achieve your goals or financial freedom, or whatever it is you're after. I'm here to kind of ensure that happens and you don't get blindsided. Because this business is a cash business and it can be easy to miss things if you don't know what to look for with that. Danny said, what's the lowest price laundromat you've seen? There's a laundromat that's shut down and is gutted. It's been empty for months. So that's one of those quote unquote free laundromat opportunities. So that's something where you can reach out to the landlord and say, hey, I'm interested in putting an upgraded laundromat in here. Is that something that I can do? And it might be something where you can tie up the space with a lease and then put new equipment in there and actually open that business for whatever you need to put down for that equipment and any renovation. So it'd be a very low cost way to get in. So I'd definitely look at that opportunity. It could be a really good opportunity for you. And real quick, just to kind of give you a little rubric here, is laundromats at about that $150,000 or less mark. I tend to find that those laundromats usually aren't making very much money, or they're not making any money at all. That's sort of what I've seen to be, it's not a hard and fast rule, but that's a pretty good barometer. Things above that are typically making some cash flow. Things at that 150 and below are typically either making very little cash flow, they're breaking even, or they're losing money. So that should help some of you guys as you're looking. Life expectancy of equipment. I mentioned this already, but about 15-ish years, 15 to 20 for washers, 20 to 25 for dryers. Is it harder to get a loan for this than a regular home loan? SBA?
A little bit harder. A little bit harder. Yeah, it's a little bit harder, but I don't know. There's certain banks, like when we do small deals, we have banks that close SBA loans in 3 weeks, but most banks are about 60 days. If there's real estate involved, it could be 3, 4, 5 months. It really depends on the borrower too, because they need to do a lot of stuff and they need to get signed documents. They have to have their tax returns, transcripts. But where else are you going to get, almost 100% financing? Nowhere. So hey, pay the dues. If you're able to, it's just like if you're a first time home buyer and you get FHA financing and then you get a down payment assistance and you put 1% down and the seller pays your closing costs. Okay, I just got a house that's going to appreciate over the next 20 years for 1% out of pocket. So you got to think that way. It's going to be work, anything you do. I think the biggest thing I see from this conversation is at least Jordan's very transparent that the work is going to be in the finding it and in the beginning, and then it becomes more of a semi-passive. But it's never bye-bye, I'm going to see you later, because the only way you can do that is if you have a general manager. You still have to manage the general manager.
Yeah.
But it can be a pretty passive business compared to, owning a restaurant or something crazy like that.
For sure. I would much rather own a laundromat than a restaurant. 100%. Laundromat still work in an affluent neighborhood? Absolutely. But your business model might change, right? Affluent neighborhood might be somebody who wants you to do the laundry for them. So that's a good drop-off laundry or pickup and delivery laundry service, or short-term rentals or something like that, where you can do their laundry for them. So yes, but the business model will probably be different than in a lower income neighborhood, which makes a lot of sense. To use an automatic door to open and close your doors. I saw that some owners use this format and didn't know if this is ideal. So one of my laundromats is a unattended laundromat, and it's got automatic doors. So it automatically unlocks in the morning. And the first, customer who opens the door, usually they just prop it open and it stays open all day, and it automatically locks at night. But I need somebody to make sure everybody's out of the laundromat and then physically close the door to make sure it's locked. So that's when the cleaner comes for that unattended laundromat. Yeah, I'll talk a little bit about the presentation. Yeah, good point. I'll tell you right now, actually. So when you're valuing a laundromat, you need 4 numbers, and I'll tell you what the 4 numbers are and how they shake out. Okay. So number 1 is you need the net income, net operating income. That's just your total income minus expenses before loan payments and taxes. That's your net income. Then to that net income number, you're going to apply a multiple. And I mentioned earlier, it's somewhere between right now 4 to 5.5 on average, but that's a pretty big gap. So you need the other 3 numbers to tell you where on that spectrum the multiple is going to be. Okay. So the other 3 numbers are the age and condition of the machines, the rent amount, which we talked about. We're aiming for 25% of the gross income or less if possible. And if more, that multiple starts to drop down. Maybe it starts out at 5.5 and it drops down to 4.5 because, it's, 30% of the gross rent amount. And then the fourth one, which we already talked about also, is the number of years left on the lease. So anything 15 years or more, you're looking at, that's a pretty good lease. So you're probably on the upper end of the multiple. And once you're around that 10-year mark, you're on the lower end of the multiple. And less than that, you've got to either get an extension on the lease, a new lease, or probably you're going to bail on that lease. So that's generally what I wanted to communicate there in the presentation. How much do machines usually cost to repair? So it really depends on a whole lot of situations. Not cheap, but you need to build those costs into your pricing. There's a whole lot of variance in there. I'll say, I think for my mechanic, and this will vary, but for my mechanic, I want to say it's $75 just to come out. And then he's at, I want to say $50 or $75 an hour plus parts for that. So in one of my stores, I have all new equipment. So he almost never comes, and repair costs are super cheap. But before I put new equipment in, all the machines were old and he was coming a lot. My repair costs were high. So it's going to vary on a case by case basis. Definitely something you want to look into though. Do you have app-based or credit card-based machines? I'm thinking I'd prefer have it cashless for ease of, Yeah, we talked about this a little bit. For me, the question is it all digital or is it hybrid digital and also coins? And that's sort of the debate. For me going forward, I'm probably going to go all digital just for the same reasons you said. Demetria, I think it's Demetria. What machines are good? So I'd say the three biggest machine brands are Speed Queen, Dexter, and Electrolux. There's other machines and they're all pretty good. I'd say those are probably the three biggest ones, and they all have some nuances, but they're all pretty good. They're going to have about the same lifespan, and they're all going to do the same general function. So one thing to consider is the distributor that you'll actually be working with, how you're meshing with them. There are distributors who will just sell you equipment, and then there are distributors who will sell you equipment, give you advice, let you ping ideas off of them, give you input, help you make sure you succeed. I'd rather pay a little more for equipment to work with the latter distributor than to pay less and to just essentially have them sell me equipment and leave me to my own devices, especially when I'm buying my first laundromat. Tips on crafting business plan. You want to chime in on that one?
Yeah, free resources like the manufacturers are going to do demographics. So you want to definitely hit on demographics, foot traffic. You want to know, you want to just include this. I mean, you don't have to do this like beautiful plan. It's just really like the numbers. And then we have a projections template. You build that in, you take the numbers from the manufacturer. They want to know that you've done the research and you can like just answer their questions. They're really not that complicated. A lot of times they just need clarity. So, I think like you only really need a really detailed business plan when you're doing a startup. So if you're doing a startup, reach out to me. I'll show you some examples. But if you're doing a business acquisition and there's cash flow, you don't need much of a business plan. It's like a one or two pager. Only if you're doing a big value add. So it's really a lot of people, but only on the startup do I see that you need to put the most amount of effort, because those are going to have the highest failure rate, especially if you have no experience. I'm going to lend you $1 million. You have no experience in the laundromat industry, and I'm crossing my fingers, and you got no collateral. So that's when we really got to just hone in and do the business plan. But other than that, really simple.
Your biggest liability is going to be something ADA compliant wise. There's a lot of ADA rules that it's really difficult to keep up with all those, or something like a slip and fall. And I did have somebody sue me on a slip and fall, alleged slip and fall. It wasn't really, it was a cash grab, but that's there. But that's why you have, insurance and things like that to take care of that. And you let them sort of deal with it. Just make sure you've got good insurance. If you mean something different, let me know and I'll try to answer your question.
You know, if general liability, I mean, you just want a good insurance broker that's
Yeah.
going to cover you and for slip and falls and anything that could happen. But I would say that was probably be the most prevalent thing is somebody's going to slip and fall on the tile floors because they're usually those smooth tile floors, and somebody puts a wet clothes on there or spills detergent, and you know, that's what's going to happen.
And yeah, and there's right now there's somebody going around LA finding like the nitpicky ADA stuff and suing laundromats, for that. So that's another kind of thing, but it's just a cash grab. What resources recommend to review the ratings on laundromat equipment? There are, to my knowledge, no ways of doing that. There's a whole lot of problems in this industry. Equipment transparency and ratings and stuff, that's one of them. The best thing to do would be to get some input from other owners, either on like the forum, or there's some Facebook groups too that you can ask that information about. But just beware, you're going to get, for every person that answers, you're going to get a totally different opinion. So, the best thing to do would be talk to owners and then start talking to distributors and check out the actual machines. Fund details, I'll leave that. If you are interested in the fund at all, shoot me an email, Jordan, Jordan, at laundromatresource.com, and I can send over the details we have for the fund right now. But I can tell you that we're targeting 15% returns for our investors, but we think we can do better than that, but that's our target. And we're looking at a 5 to 7 year hold is the plan, with the intention of doing a big roll up and then exiting by either selling to private equity or a hedge fund or doing an IPO. So that's a general plan. And as more details get solidified, I'll be sending those out. So shoot me an email if you're interested in that, and just let me know you're interested in the fund.
SBA rates, if it's
Right now?
if there's no real estate involved, all SBA 7A loans are based on Wall Street Journal Prime. The Wall Street Journal Prime rate's at 8.5%. There's a margin, so index plus margin equals fully indexed rate. It adjusts based on Wall Street Journal Prime. 80 to 90% of these loans are variable rate loans. So for a prime deal with real estate, there's some specials with some banks where we get 8.99. I am doing some refis on some SBA loans. Every bank's different. Most banks, if it's a hairy deal, are going to be prime plus 2.5 or 2.75. So you're close to 11%. If you're a strong borrower and the deal's strong, you can get prime plus 1.5, prime plus 1.25. But that's very special banks and they nitpick. So it just depends on the deal. But that's kind of like you're seeing. If you're a high net worth borrower, sometimes you can get a little bit better pricing. Though that would really be deep. You got a net worth of 10 million, 15, 20 million. You sometimes can get a little bit pricey. Most people don't have that net worth, so they're going to get prime plus anywhere from 1.25 to 2.75. And there are fixed rate options, but it just depends on the deal. 10-year term, there's no prepayment penalty. If it's a real estate deal, there will be a 3-year prepayment penalty if the amortization is over 15 years.
And I'll just mention sort of on your behalf is that, we're recording this January 24. So if you're listening to this down the line, all that stuff is subject to change as things shift around. So
yeah, rates change.
Rates change and terms change and all that stuff. So that's for now. Great question from anonymous attendee, which is, I don't understand how the price is listed, but inventory not included in the asking price. What can I expect inventory to be, or it all depends? Thank you. Yeah. And what I think you're asking is, why isn't the value based on the value of like the equipment, for example? So inventory would be like if you're selling something, which in a laundromat, you're not really selling anything unless you have like vending or over the counter soap sales or something like that. That would be inventory. So what I think you're referring to is FF&E, which is furnitures, fixtures, and equipment, which would be the machines and all that stuff. And the value of the equipment is factored into the price, but it's factored in through the multiple. So remember, the three variables of the multiple are the years on the lease, the rent amount, and the equipment age and condition, right? And so that variable in the multiple is where the value of the equipment plays in. Now, that means you could buy, and this happens, you could buy a laundromat that's not performing super well. You could buy it for less than the value of the equipment. And actually, that's potentially a really good buy, because you have a lot of security there. Because if you can't turn the business around or improve it, you could always sell the equipment and recoup your money. So that does happen, not just in laundromats, that happens in real big mergers and acquisitions also. And so that's how the equipment and the rest of the furnitures and fixtures and everything is factored into the value of the laundromat. Just for like clarity, if you buy it at a 5x multiple and you pay all cash, you're looking at a 20% return on your money at a 5x. Oh, I just lost a light. At a 5x multiple, you're looking at a 20% return on your money. So that's what I would call a base hit deal there. Okay, so I wouldn't use Maytag for commercial laundry, but yeah, just Google commercial laundry equipment. Maytag does make commercial laundry equipment. They're one that I actually wouldn't recommend for commercial stuff, but Dexter, Speed Queen, Electrolux, those are probably the biggest three that I would call. But yeah, you can Google commercial laundromat distributor near me and find those. So I'm assuming in this that the laundromat, the new one, is already constructed. I think it can be a great deal. Usually you're paying a premium there and you don't have the cash flow base yet for that. And so the value would be based off of what's called a pro forma, or estimations of the performance. So, for me, I prefer to buy an existing cash flow stream that's there, but you could have potential upside for buying brand new and building that cash flow. So it kind of depends on what you're looking for, but I think the safer route is to buy an existing one that's already cash flowing. I'd say equipment costs somewhere between, so size of machine is going to vary, and the trend has been going towards larger and larger machines. So on the smaller side, you can probably expect around $2,000, $1,500, $2,000 for those top loaders. And then it just kind of goes up from there up to $15,000 to $20,000 if you're looking at 80 or 100 pound washers per unit, per washing machine. So they're not cheap at all. And you're probably, for an average store, you're probably looking at a minimum, if you're just putting all new equipment in there, you're probably looking at a minimum of $400,000 to $500,000 of equipment in like an average size store. So not cheap at all. But it's not a matter of how much stuff costs. It's a matter of what you get out of that and if it's worth it to you, right? I'll pay $500,000 every single year to make $750,000, right? Like, so you want to see, that's your return on investment. You want to see what your return on investment is going to be and if that is worth it or not. No environmental regulations affecting laundromats. That is true of dry cleaners, but laundromats, not so much. That's not really typically an issue. Are you seeing that as an issue at all for SBA financing?
When there's real estate involved, they definitely need to do a phase one environmental on it. On any SBA real estate deal, you're going to do an environmental. Most commercial loans, they're going to do an environmental, especially if it's dry cleaning component to the laundromat. So, there could be some things, but you also, if you're buying the real estate, you do want to know if there's any environmental contaminations on the property. So, useful report so you know what you're getting into on a real estate deal when you own the real estate. Right.
Yeah. You technically can rent the machines. I would never recommend doing that for a laundromat for a couple of reasons. Number one, it's your main asset of your business. So there's really, if you decide you want to exit the business, there's really nothing to sell if you don't own that business. But then the other side of it, and we kind of hit on this earlier, is one of the big benefits of owning laundromats is the tax advantages of them and the depreciation you get with the machines. And so you don't get that when you rent the machines. So actually owning them usually ends up being cheaper than renting, for one, and also you get all the added perks. Now, what you also inherit is now those machines are your responsibility, and so you've got to repair them when they need repairs and stuff like that. But you also have control over when that happens, right? If you rent the machines and somebody else is responsible for repairing, well, they're going to repair it when they get to it. And it might be quick and they might be good about it, or they might not be, but that's out of your hands in that situation. But again, it's all a math equation, right? It's, how much money is coming in versus how much money is going out. And if your utilities are going up, then you just need to respond and raise, prices accordingly. Now, there's things you can do to kind of try to keep gas bills down, like replacing equipment is a great way to keep utilities down. But listen, utilities are just a part. They're heavy consumers of utilities. They're just a part of this business. So you just need to make sure your price points are appropriately placed so that you are still making money despite high utility bills. That's just the name of the game. So
that was good. So we'll do a follow-up. Jordan will have better internet and he'll have his lighting and his wonderful studio so you can see his beautiful face a little bit better.
I look better in the dark though.
This was really good. I hope everybody enjoyed this. We're going to do a summit in March. I think the first weekend in March, Business Ownership Summit. Jordan's going to present amongst a lot of other amazing topics all around business ownership. So I'll send out some emails. This will go up on the podcast. I'll email it out to everybody so you'll have the edited version in the next day or two. And then you know where to find Jordan at laundromatresource.com, or go to his website and you can become a free member and you can look around and get all the tips and tricks. And that's laundromatresource.com. And then he's on YouTube. He's got a big channel on YouTube. So follow him there. Any last remarks?
No, I appreciate you guys. And those of you guys who have stuck around this entire time, let me just say you guys are champs. And I guess the last thing I'll leave you with is you will have wasted the last hour and a half of your life if you don't take action on something here, right? It's awesome to learn and we need that period of time to learn, but at some point you've got to take action, whether that's in the laundromat space or real estate or any other space that you're looking at. You've got to take action in order to achieve your goals. So don't forget that part of it. That is crucial. That's key.
Anybody needs financing conversation, bookwithbo.com. Bo is BEAU. Bookwithbo.com. Book a call. We'll talk about financing and business acquisitions and business startups. All right, everybody. Jordan, you have fun in Vegas. You go party it up. And well, thanks everybody. Awesome. We'll see you soon. If you're in Vegas, look me up, and we'll see you on the next event we do. And you go to my podcast and like and subscribe to that as well. See you guys.
Night, guys.